What's your current view of Puerto Rico? What debt do you like within the island?
It's very difficult for us right now in Puerto Rico. There's a lot of unknowns. The New Deal that came, we're a little concerned that that may be the last time that Puerto Rico is able to borrow, quite frankly. It was a $3.5 billion deal. A lot of municipal participants did not play that deal. We played the deal very quickly, wrote it up a few points, traded out of it. Right now, we still like the sales tax bonds, the senior sales tax bonds. We think that's the best value, but we're very, very cautious, and only about 1.25% weighted in our portfolio in Puerto Rico. What's going on down there is still the same dynamics, a weak economy, a little bit of a brain drain with people leaving. The governor's done some nice things, but we think there are better opportunities in project revenue high-yield bonds than the opportunities we can get in Puerto Rico right now.
Such as where?
Well, I think that the senior living sector is a key area. The aging of America, people need to be taken care of in their old age. We get a mortgage on those facilities. We get a very high rate. Toll roads are being built. Infrastructure is becoming a big deal right now in this country. We own replacement bridges. We own desalination plants in California. There's a lot of good infrastructure projects that you can sink your teeth into, do good research, and get paid a really high coupon for.
And what makes some infrastructure projects high yield as opposed to projects that are financed through revenue bonds or some other, I guess, less in terms of high yield, smaller yields?
It's the seasoning, really. You know, obviously here in New York, the New York Thruway or the New Jersey Turnpike, it's going to be a much more seasoned, high-grade deal. However, a startup facility like a desalination plant in San Diego, California, that's going to be lower rated because it's at the start. They're going to have to build a plant. They have construction risk. If the replacement bridge is being levered in some way with some extra borrowing, that's going to have a lower rating. A toll road that wasn't around, a brand new type of toll road, is going to be more in the lower speculative grade, whereas something more seasoned is going to have a higher rating. But if you do good research, you know what the occupancy is, what the user fees are going to be on the road, it's going to be a really good investment down the line.